Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the Morning Market Prep video for March 6th, 2024. Well, how about we take a look at what happened overnight? Well, first off, we had Asian markets last night ended up closing mixed, but mostly lower. We had a good bounce in the HSI. Remember, that's the tech-heavy sector over there, HSI. Nice bounce of 1.70% overnight, and that's helping fuel a little bit of a tech rally that saw such heavy selling yesterday. We also had Australia just a tiny bit higher, while the rest of the indexes were just slightly lower. If we take a look at European markets are green across the board this morning, trying to shake off a little bit of that Thursday fear of their ECB rate decision. But looking at it, they are only modestly higher. As a matter of fact, the DAX is only up 0.02%. CAC is up 0.03%, so very modest gains. These could flip back and forth pretty easily. So I'm going to say Europe is relatively flat. However, here in the U.S., we've got a nice little bounce back up after yesterday's kind of that tech wreck yesterday, trying to bounce back up and recover some of that early this morning, with the NASDAQ getting the boost overall this morning. If we take a look at our oil prices have also shifted direction. We've got oil up 73 cents at 79.88 a barrel, and Brent is up 52 cents at 82.55 a barrel, with natural gas down just ever so slightly, down just a touch over 2 cents. Bond yields, interestingly enough, are moving up just a little bit this morning. They've been, they really came down hard yesterday, but starting to tick maybe just a little bit higher, and just maybe a little bit of concern about the Powell comments in Congress. We've got the 2-year bonds at 4.57%. 10-year is at 4.16%, and the 30-year bonds at 4.30%, kind of holding in there steady with earlier in the week on those. And of course, our short-term bonds, well, they're hanging in strong. Both over 3 and 6 month bonds are both over 5.25%. In fact, 5.38 and 5.31%. Looking at any of the news events out there, of course, Super Tuesday happening, just flashed as a news event. Nikki Haley bowing out, which leaves Trump as the nominee on the Republican side, and it looks like Biden is going to sail pretty easily to victory as well for the Democratic side. Let's take a look at, what does all that mean for today? What we should do is kind of settle in, buckle up, and let's get ready for the Wednesday edition of the Morning Market Prep video. Good morning once again, everyone, and happy hump day. I hope everyone's having a good day, got a good rest last night. We've got a wild one potentially setting up for today. Could mean almost anything. But how about we take a look at these charts first, see if we can glean just a little information about how we might want to approach the market for today. Try to shake off that bias here in the market. Now, yesterday, you guys know that I've been warning of a big point move as possible. Honestly, I didn't expect it to be quite that big yesterday. Some pretty heavy selling, taking a lot of the frothiness off the market, but there's some interesting things in the internals that we'll go over here in just a little bit, that it wasn't as bad as it looks on the index charts. So first off, if we take a look at the diamonds, well, one thing that we're going to have to notice here at the moment is what we have done is created a little bit of a lower high. there in the diamond. So that does raise a little bit of technical damage in the chart that we'll want to be paying attention to, and you'll want to notice that we did break the upside trend substantially, cracking all the way down here to this support level in the chart, which seemed to be kind of a stretch yesterday morning. Now we're trying to bounce up in the pre-market, and as we bounce back up, we've got to start thinking about resistance. So if the bulls can really get going here today and push back up, we're going to be looking at this price resistance in the chart to potentially resist that bounce back here in the market. Push back up into here. Look for that resistance. If they can push beyond that, which will be a big deal if they can, the bulls will really get excited if they do break back through there. Then look for a retest up into here and see if we can test that downtrend that has started in the market. And of course, we've got quite a few little levels of price resistance in the chart. I think the most important being right there. Pushing through all of that means we're probably headed back up to more blue sky highs in the diamonds. If we take a look on the bearish side of things, if the bears can't hold on to this sentiment this morning and this pushback up, a failure here could be pretty critical. So first off, a pullback to test into here is something we'd want to be paying attention to. And if I redraw that downtrend line, remember we could get stuck in a range here and just bounce around out here toward the trend, trying to make that decision if we're going to go up or down. If we do break down below this level in the chart, well, it's going to get pretty interesting, and it could get ugly with some big point moves to the downside, because fear will really come into play on the market. And you can see we've got some levels down here. We might test down in here and push on lower. We could really get ugly pushing down into here if the bears were to really engage. Let's take a look at that SPY. SPY, pretty rough day here on the SPY, leaving behind a nasty looking evening star pattern here in the chart that we'll want to be watching carefully here today to see how we respond in reaction back up. But nasty little evening star pattern. But you know, the good news is we held this support level in the chart. So I don't think this is all that terrible in here. And of course, on the SPY, we're holding in there on that trend. So I still have to look at this chart, even though we've got that evening star pattern. It's a bullish chart. And if the bulls can find that inspiration and push back up, well, you can see resistance right in here. That's where we need to break first. Popping up through there would certainly recover all of yesterday's selling in the SPY, and then pushing up maybe in here to fill this gap would be the next level. And then of course beyond that, we're looking at possible blue sky highs in the SPY. And if we take a look, if the bears were to find inspiration, well, the first thing they're going to need to do, I think, is if we reverse today, is break down below yesterday's low here in the chart, which could bring us into that situation of a double support right here of the upside trend and that price support in the chart. However, breaking through that, we're likely to drop into this area, and you'll notice dropping through below that candle right there sets us into a gap where we could drop pretty hard down into this area. So still, we want to be prepared for those big potential moves to the downside if the bears find reason to engage here in the SPY. QQQ also, rough day yesterday for big tech. A lot of things are bouncing back here this morning, so we're getting a good lift back up, but just be careful here. Remember, we've got quite a little bit of data coming our way that could be either bullish, bearish, or maybe even turn out to be a non-event. Here again, pushing up in the chart, the first thing we're going to need to do is break back through that area right in there. Break back up into that area, and then if we can push through there, we've got that little gap that we need to fill here in the chart. So pushing up into here would be the next area of resistance in the chart to be paying attention to. And past that point, if we can break up through there, well, we'll be looking at testing the all-time highs in the QQQ and possible blue sky highs after that. If the bears find inspiration today? Well, this is kind of critical here. You'll notice in this chart that we held onto that support, and just briefly we dipped down in here and took a look at this gap. So if the bears were to push down to here, first level of pressure support is right in here on the chart to hold that area in the chart. If that holds, wonderful. If it doesn't, well, that's a pretty steep fall that could happen right there in QQQ, falling into that gap. We'll want to watch that pretty closely. Notice if we look right over here, there's a little bit of hope that we might catch a little a price support level just before that, falling through to fill that gap completely. But could be a rough time if we drop through this level. And then if we look at IWM did a good job holding on yesterday. At the end of the day, we really started to change that a little bit though and sell back down. But the good news is at the end of the day, we held on to this trend in the chart. So no harm, no foul here overall in the Russell. The question will be, if the bulls find that inspiration today, can they push back up through here and test that little gap area here in the chart? See if we can get back through that area. Getting back through there, then we're looking at a resistance of that high right here. See if we can push on through and test this major resistance in the chart. If the bears engage, well, you can see they don't have a whole lot of work to do if the bears were really to get going in the chart. Breaking down below this little area of congestion in the chart would break that trend, upside trend, and likely push us back down toward this area of support. And you can see that area of support runs back here a ways in the chart. Breaking beyond that, well, that's where it gets a little bit painful. We could drop pretty hard into levels down in here on the Russell. Now let's take a look at our VIX. Our VIX popping up here yesterday, but notice right there at the end of the day, that rally, that surge back up, we eased that pressure. So coming in under 15 handles at one point in time yesterday, we were up over 15 handles in the VIX. But one of the things we do have to recognize is that does give us that possibility that we've held on to that little upside trend and we've broken this downtrend. Now remember, if the bulls can really engage today and push us right back down, it won't mean anything, just volatility in the market. However, if we push this back and we hold in here as a higher low someplace, that's usually where the real fear can come into the market. And it's just going to be interesting to see how we react to Powell's comments today. Will it be bullish, bearish? I just don't know. The market seems pretty convinced. I mean, unbelievably convinced, despite the fact what all of the Fed members keep saying, that the Fed is going to soon cut rates. Boy, there are seems to be taking an awful lot of risk here on that side, suggesting that they know something about the market that the Fed doesn't know. We'll see if they're right here, but that creates those big potential moves here in the market that can really be painful if you're on the wrong side of that trade. If you take a look at our T2122, the 4-week new high, new low ratio, this is where I was going to suggest that things yesterday weren't as bad as they seemed. With such a big point move to the downside, all we really did is take a lot of the frothiness out of the market, and it really does show us how thin a market we actually have right now. And what I mean by thin, if we were to look at the majority of the market, it was tech giants that sold off pretty heavily yesterday, pulling the market down, while the rest of the market that hasn't been doing all that much to the upside just kind of went ho-hum, and it's that tech leadership that created that big pullback here in the market. Now we're still holding above the 50% area in the chart, so we relieve some of that bullish pressure here in the market, meaning that if we can get good bullish energy here today out of the data, well, there you go. There's your upside move possibility. It could be pretty substantial. Notice that we just have a little bit more of a move possible for a downside move if the bears find inspiration today. So I'm going to put this in kind of that 50-50 range, which makes some sense because the reaction that we get to this data today, well, it's kind of a coin toss, and it's hard to know what's going to happen next here as Powell testifies. If we take a look at our T2108, T2108, our T2108 was actually moving up a good part of the day yesterday, showing us again that this sell-off yesterday wasn't all that bad. It just kind of pulled some of that frothiness out of the market. But then at the end of the day, we started tailing this lower and pulling back just a little bit in T2108. Remember, this is the percentage of stocks above the 40-day. But I got to tell you, there's nothing in here bearish yet. We're holding in this range with a lot of chop and a lot of uncertainty, but there's uncertainty in the data that we've got coming at us. So that's pretty much to be expected. If the bulls can find that inspiration today, maybe we can pop on through up here and really start to stretch T2108 to the upside. If the bears find inspiration, well, we've got support levels down here that could potentially hold it if we push on lower. T2107 was pretty much the same thing, where we had it trying to, well, it was flat, trying to hint a little bit to the upside from time to time, but then at the end of the day, it ended up succumbing to that downside pressure. Notice we have a pretty strong resistance here in that chart, a pretty strong support here in that chart. So if we can find bullish inspiration, we may retest this high or even pop on through there, showing that bullishness. If the bears find inspiration, well, it would be pretty easy to see that possibility that we could slip back down here, test this support area in the chart, and we'll want to watch that pretty closely today. Expect some whipsaws, expect some pretty violent price action to potentially occur today. If we take a look at our T2101, interestingly enough, with all of that volatility that we had yesterday and all of that selling, the bears didn't get it done. Because what we see here in this chart is that breadth fell on that big sell wave, which is really strange. Typically, when you get that big momentum of selling to the downside and big point moves like that, you're typically going to see the breadth succumb to the bearish side and really start pushing up. Didn't happen. No breadth on that move yesterday, so it was relatively controlled overall, and we continue to see that breadth falling. What is not good is that we really haven't been seeing the breadth increase on a buy wave either. So something strange is going on here in the market, and that's why I think it still puts us in that situation of a market that could make really big point moves and even whipsaw those numbers pretty substantially. So just be kind of careful there. If we take a look at our economic calendar here for today, well, our economic calendar, we've got a few things to be paying attention to, as I was talking about. First off, most importantly, is going to be those Jerome Powell comments here today. They're going to probably dominate all the conversation of the market here today. But first off, we just had mortgage applications come in, and they came in strong, giving a little bit of a bullish boost here initially, kind of a spring hit, people going out trying to pick up homes. So watch that closely here today. The ADP number here this morning, we'll want to be watching that carefully. ADP is looking for an increase here in those ADP numbers, non-farm payrolls moving higher. That doesn't help the market here if we see those numbers continuing to increase, because that means the jobs market still is hot and the Fed has more work to do. So watch that carefully. The job openings report, they're looking for that to decline just ever so slightly. Remember, that's been moving back up here recently. And again, that's working against to what the Fed is trying to do there in the jobs market. So keep an eye on that. If that comes in lower, that could also be bullish for the market today. And then if we take the big one for the day, and that's going to be Jerome Powell speaking in the Senate Banking Committee, you can probably expect some pretty interesting fireworks in here. We've got one side of the aisle is very interested in probably putting an awful lot of pressure on Powell to start cutting rates ahead of the election. They want to get that going, try to prove to their constituents, hey, we've got this, everything is under control. Right now, Powell is saying, elections don't matter to him. It's about the numbers, and they keep saying that the numbers are not showing the improvements that they would like to see. If we take a look after that, we've got a wholesale inventories, we've got a petroleum status, which could be really important today as well, watching those oil prices. What we don't want to see is we don't want to see those oil supplies continuing to show those declines here. We need to see those start picking up. Otherwise, we're likely to start seeing those oil prices moving up, gas prices going up, adding more pressure to that inflation equation. Bond auction, and then we've got a couple of Fed speakers here today along with the beige book. Remember, tomorrow, international trade, jobless claims, productivity and costs, and Jerome Powell will once again be speaking in the House committee. So yeah, be prepared. We still have more work to do this week on potential volatility. Let's take a look at our earnings calendar for today. On our earnings calendar could be, well, kind of ignored overall. And the reason I say that is we could be in that situation where we're going to be thinking more about what Jerome Powell has to say. So we could largely ignore these numbers today. But we do have some notables to pay attention to. There is no blogging. Again, with this me hobbling around the way I am, it's taking so much longer to get everything done, just moving around the house and making things a little bit difficult to get everything done I need to get done. But you'll notice in here, whoops, I've got a typo in there. We've got Abercrombie, big theme in retail in here. Abercrombie, Brown-Forman here. We've got Campbell Soup. We've got Foot Locker in there on the day. CC will be in there. That's going to be pretty interesting one to pay attention to. We've got a little bit of gold, KGS. We've got WPM. But you can see as you look through these, really not kind of the stocks that would inspire a lot of inspiration in the market. So when I say largely ignored today, particularly the ones that come out this morning could be largely ignored by the overall market because we're going to be so focused on that Powell data here today. How is he going to sound? Is he going to be bullish, bearish? What's he going to be in the market? And it's hard to know. Let's take a look at some stocks that could be setting up for today. But before we do that, everyone, if you could do me this quick favor, if this is the first time you've seen these videos, if you could please click that subscribe button on YouTube and also click the bell icon when it pops up so you'll be notified every time I post a video. And if you find these videos to be worthy, then do me that favor and click that thumbs up button, leave a brief comment. It really is the engagement with a video that probably does the most in helping the algorithm to show these videos to other folks. So thank you, everyone. And just about 31,000 subscribers, and I never in my wildest dreams thought there would be enough people out there with content that I put out where there's no prediction and no hype that would find traction out there. So I'm very, very grateful to everyone who does take the time to do that. Thank you so much. Remember, feel free to share these videos on your social media feed. That helps a lot. And just another big shout out to those of you who support the channel through the Buy Me a Coffee link just below the title of the video. Let's take a look at a few charts that could be setting up. And remember, guys, these aren't recommendations to buy or sell any security. Do your own due diligence, follow your rules, your guidelines, and your tolerances for risks. Never ever blindly follow anyone else's trade ideas. Well, first off, let's take a look at some things that really could get interesting here quick. First off, let's take a look at TLT here in the market. Now, darn it, second, I'm having a little technical issue here for some reason. There we go. TLT. Looking at TLT, pretty interesting. Now, if the market is right, if Jerome Powell is going to start cutting rates quickly, we're going to see those bond yields fall pretty fast. And if that were to be the case, notice we've got a pattern that could be setting up here in stocks like TLT, where we could pop this through that downtrend right here and hold that higher low. Notice we're coming back up here in this. I would be keeping an eye on stocks like TLT, maybe BND. I would be watching those, because if those bond yields start to collapse, if the market is right and the Fed's going to start cutting rates, then watch for that possibility we break these trends here in the chart, and also watch for the probability that the dollar will fall. And if the dollar falls, we want to start looking at those commodity type prices out there. And you guys know I've been talking about gold. Gold just took off like a rocket ship here to the upside, and really moving hard. As a matter of fact, I ended up closing my PHYS position yesterday, closing it out because I couldn't sell covered calls against it to really hedge it. And after a big surge like that, I am looking for that possibility that this could rest or pull back. But having said that, we're seeing things like even corn. Doggone it, I can't type today. Seeing corn breaking this downtrend, showing that higher low. Remember, when dollar falls, we typically see commodities move to the upside. So we could see gold, silver. You guys know I've been mentioning palladium. Keep an eye on this palladium trying to hold that higher low in here, maybe coming into a trend. Watch for that opportunity to start pushing up. So keep an eye on some of those. And then, of course, we have to start looking to those oil sectors as well as a commodity. If we get a decline in supplies today on our numbers, and then also get a combining decrease in the US dollar, then look for those to move up. Now, you could reverse that. If Powell comes out and he appears hawkish, no, we're not done cutting, we're not done with rates, we're not probably talking about raising them, but we're holding in here, we could see the opposite of that begin to happen. So be kind of careful in here. These could whipsaw quite a bit, but could be interesting moves, and in a big way if we see those dollar value fall, bond yields collapsing. That would probably encourage the banks to really start buying up bonds again, and we could really see things like TLT really surge to the upside if that were the case. So kind of keep a close eye on that, depending on how Powell talks in the market. Now, if we look at some stocks here in the market, there are some interesting things, and I have a little bit of a bias on here. I did pick up a position here in BMY. BMY coming up out of this bottom. Notice we kind of popped up in here yesterday. I don't plan for this to be a quick upside trade. I plan for this to be a longer upside trade here in that chart. coming up out of that bottom, showing that bullishness coming into the play. We've got this W formation. First critical hurdle this is going to have to make is get through this resistance. So it's got some work to do yet. I don't want to give you that idea that this is a slam dunk going to the upside. May still have some work to do, may still have to work out this bottom in here, but starting to show those signs that we may be coming up. And when we start to see rotation happening in the market where we're deleveraging some of from the high flyers in tech, we might see some of these stocks like this that have been really oversold and probably providing some value in the market become more favorable, and we'll get more of a widespread rotation into stocks that provide that value. So watch that closely here in BMY, starting to look pretty decent, I think, in the trade. Take a look at some of retail out there. Oh my goodness. Walmart looking really, really good. I've been mentioning this for that upside move, continuing to stretch on up, all-time highs here in Walmart. I wouldn't want to chase it. I think there is a chance a little rest, a pullback could be coming in that chart. It may be nothing more than a consolidation to hold that support level in here and then come on out to trend to continue that move on higher. But watch that closely, looking pretty good. And there's some discount retailers looking really strong as well. Take a look at Dollar Tree continuing to just creep up this trend here, looking strong, continuing to push on up in that chart. If I pull this back, you can see we're approaching some resistance levels in the chart, but every reason to believe we can continue to stretch on up on that. And then if we take a look at the discount seller Dollar General, big, strong push to the upside, just zooming up here in Dollar General. We may run into some resistance in that chart right in here, but watch that carefully. And of course, when you talk about retail, you can't not talk about Costco. This thing is a monster, continuing to just run to the upside and showing lots and lots of strength here on the retail side. So watch that closely. Other places in the market you might want to be paying attention to. First off, we got to look at those financials. Right now, the big banks are looking strong, and they continue to show this bullishness, holding support here in the chart, and that possibility, if we are going to cut rates, if Jerome Powell comes off as dovish, then look for these big banks to celebrate to the upside. If he goes the other direction, well, watch out there. That could be a problem for those big banks, more costs and pressures on them. And we're running into a little bit of a liquidity problem here, not just in the United States, but around the world. So watch that carefully here. On those financials, and you can see stocks like Goldman Sachs holding in bullish patterns, Morgan Stanley trying to push back up and regain a little bit of resistance in there. If this holds in this area, pushes this on up and holds, then that reason that we might push on through to the upside. Take a look at BAC. BAC breaking this resistance on 2 good solid days through, breaking through up here, and we've got that new level in the chart and possible resistance areas up here we could be testing on those, so keep an eye on that. Now, on the other hand, we have that opposing situation here with some of the regional banks. They've been struggling, but my goodness, did they get a surge yesterday to the upside, really popping in here, pushing up, which kind of flies in the face of all of this commercial real estate problem out here, but we're really trying to buy them up. So if they can push up through this area of resistance and hold the higher low in here, well, that's what we look for, right? That higher low that breaks the downtrend, that starts an upside trend in those regional banks. So watch that carefully. I think taking a look at TEVA would be a wise idea. This thing has been moving in a beautiful, concise upside trend. Notice this nice little resting consolidation in here. Look for that next opportunity for for that to push on through to the upside. And I gotta say, IBM is still showing some pretty interesting moves here, pushing up strongly. That rest in here in that chart could pull that back, and then that opportunity IBM could push on up. And I'm going to go to a weekly chart here on this so you can see we could be breaking into this area and heading up toward that 200 215 area in the chart, testing some of these all-time highs in IWM. So looking pretty good overall. So with that, everyone, run this video kind of long. Want to wish you all a fantastic day. Thanks so much for being here and listening. I truly appreciate it. Be careful, be safe today, and I'll see you right back here bright and early Thursday morning, where we're going to be waiting for the European Central Bank to make their rate decision. Take care, everyone. Wish you all the best.